Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week. Try to learn something from it and then plan for a better trade for the next day. So this is analysis for the week that's starting from January 23rd, Monday, tomorrow, 2023. Let's get into see straight away into the charts, and this is weekly charts of the Nifty and the Banknifty that you're seeing there. Left side is the Nifty. Look at this. It's indecisive, a dodgy candlestick pattern. What do you see? A dodgy is indecisive. There's a big fight between the bulls and the bears, and then market is not able to decide on which side to move. And that's the same that happened the previous week as well. We have another second doji that is formed, and right side of the Banknifty's weekly charts also you're seeing a very small candle, but this is more of doji, but not a hammer fully. So you can call it a doji with a long wicks. Is normally a dragon flag, but that's again indecisiveness that is seen in the Banknifty also, and this is a repetition of what happened last week as well. So it was a doji. So consolidation is continuing since the last 3-4 weeks now. Right? So the fourth week of consolidation that you're seeing in the Nifty. That's where we are. But remember, look at this. This is the weekly chart of the Banknifty and the Nifty, and this is a trend line that we had been speaking about so long. That is from where the breakout had happened by the end of the October, and then it had made new all-time high, and then retraced completely, and then consolidated for some time, and then it attempted to move up, but it could not, and then continue consolidation for the last 4 weeks. It's the same story that you see. We have the trend line, which was attempted multiple times and finally broken out to make all-time highs, and then retracement happens, and then consolidation and indecisiveness prevails. That's exactly where we are. Let's look at the daily. It's a Friday close. If you see, it's a bearish close. It's a wide range bearish candle that you see on the Nifty on the left side, daily charts, and Banknifty right side you are seeing it's indecisiveness and a doji candle on the daily charts as well as the Banknifty. Right. Let's get the numbers and see quickly. 68 points is what we gained the entire week. We're still the same place where we are, more or less. Right. Moving little down from the 18k, moving little up from the 18k. That's all it has been doing for the last several weeks now. But it was 68 points week to week gain that the Nifty had. That's 0.38% indecisive doji, but it managed to close above the 20 weekly moving average. And we talked about the trend line resistance, which has been acting as a great support. That has been not only the candle that is formed this week also is completely engulfed within the 4-week back candle. Look at this. The 1, 2, 3, 4, fifth week backwards. If you go, that candle is so huge, and all these candles are completely engulfed in that. That's pure consolidation taking support. Is that way. See, Banknifty lost. Actually, there's a mistake. It's not losing. It's gaining. It's 0.32. We correct that right away so that nobody interprets it. So the Nifty also gained just 134 points. It's 0.32. So overall it's a close, flat, indecisive, right? Very small body candles that is formed, and that also is a 20 moving average. Close about that, and that also has got a trend line resistance from where to block out, and then kindly come down and take support and consolidate. The engulfing for the 4 weeks back candle is still there this week as well. It is completely inside that. So consolidation is the nutshell, the price action, so it's pure consolidation that is extended to 4 weeks. Now look at the daily candles. We already see that 80 points is what we have lost on Friday in Nifty, but less than half of it, 278 points is what we gained in the Banknifty, although it's an indecisive doji and clear directional bearishness on the Friday on the Nifty. Now the thing is, it is closed below the 20 moving average on both the indices, and Nifty is even closed below the 15-day exponential moving average. So That's even making it worse, and confirming that it's going to be tough resistance move. So now look at the Bollinger Bands that you see, right? It has turned out to be purely consolidating sideways. The contraction of the bands is confirmed, and it is a bearish bias, of course, just because of the fact that the price is closed below the 2-day moving average. Nifty also has finally confirmed that it's a contraction sideways movement to expect. How long this band would excuse and how long it will stay in this range is something we cannot predict, right? So right now it has, after a decline, it has now turned into sideways pure consolidation. It's very much evident from the Banknifty daily charts and the Nifty daily charts very clearly. We have seen that. Now let's go to the support resistance levels. Make a note of this bias. So right now the downside support that you can see is 18,000, and then 17,559 previous. And after that you have the 50 retracement 17,825. So the natural drawdown number also support, and then comes the previous swing low 17,761. If that is breached, then you have a new lower low, and then it already has a new swing low, and if it goes further down from there, then definitely that's a price action base negative. It could go off to 17,642, 17,569, which is a crucial 61 retracement for Fibonacci. And breach of that would mean that we have going to head further south. Now upside, on the upper side, the first resistance would be the Fibonacci 38 retracement previous swing high, and then after that you have the, so that's falling at 1817. After that you have the 18,142 previous swing high, and then 18,260 will be the resistance after that. Then Fibonacci 23 will come, so say 18,385, and 18,442 would be the zone. 18,442 to 465. That zones would be another previous lower high would be the breach, which would confirm that we are in continuation of the rally and the bottom is made. Right now we cannot say anything because we already made a new lower low with few points down from the 1771 to 1762 something, 61, yeah. So that so price action is clearly bearish on the Nifty, but it attempted to break out of the descending wedge and then showed the the indication of making an upside move, but did not materialize when it showed a Good Friday red candle for sure. But so that's making out of those resistance and support levels that's marked in here, correlate them with the open interest data, and then we can get to a conclusion as to where the supports and resistances could play out. Banknifty similarly, the resistance immediately above would be the 42,500 rounding number, 42,566, which is again a Fibonacci 23 retracement levels. So that could be a resistance first, and then above that 42,833, and then 43,000 rounding number will have good resistances before it's breached. Then you have 43,339, 43,615, like that it goes resistances. Downside support would be Fibonacci, not Fibonacci, that it's a previous swing low resistance. It's a mistake here right away. It's a previous swing low, and it's 42,363, and then 42,231 would be support. These two are not resistances, making out of that they're supports. Then 41,835 would be previous swing low resistance if that is breached, and then Fibonacci 38 retracement support will come at 41,586, then 41,184. That's how it goes downside. Right? So Fibonacci 50 retracement support could go as low as 47,86, 40,800 could be the. It could be a new swing low as well if that's breached. The Fibonacci 38 confronts with the previous swing low of the price action. If that is breached, then it could easily go and make a new lower low. So Banknifty, the price action, new lower low is not made yet because it had taken support very close to the previous swing low and then bounced up. It did not make a new lower low, while in the case of Banknifty it has already made that with a small bounce up, small dip and a bounce up that happened. So these are the levels for the Banknifty. Moving ahead, momentum and the trend. We're using the RSI and the ADX indicators for the same. So what you see here is Nifty on the left side, Nifty weekly charts and the Nifty daily charts. Downside, Bank Nifty weekly charts, and right side, Bank Nifty daily charts. So weeklies, if we analyze, you can see the momentum is in the bullish zones on the Bank Nifty, but in the Nifty, it's in the sideways. It has slipped in the sideways from the top. Bullish zones, and it's in the sideways. So momentum on the daily chart, if you see, it's in the sideways on both the indices, and sideways and falling, sideways and rising in Bank Nifty. Yeah, that's how it is. Nifty, it's sideways and falling. So overall sideways, you can see, except the Bank Nifty is showing a little extra strength on the weekly charts. Right? That's just now ADX indicator is a trend indicator. It is seeing down here. So ADX is bullish on both in the Bank Nifty, but the problem is it's having a falling strength, not enough strength in the bullishness. But the short term, it is it is bearish on the Nifty, and it's bullish on the Bank Nifty. You can see that. And bullish in the sense it just managed to cross over to the bullish zones on the Bank Nifty, daily charts. But Nifty, it's it's just crossed over from bearish to bullish to bearish. It's a quick two-time crossover that has happened on the Nifty. So you cannot make anything from that. So overall, short term there is bearishness, you can say, and long term it's continuing managing with the bullishness on the trend. So trend is also sideways, very much clear from the differences that you are seeing there. So momentum sideways, trend sideways is what we can make out. If you summarize all the higher time frames and lower time frames as per the RSI indicators and the ADX indicators for the trend. Right. Let's move on. Volatility indicator. India VIX is a sentiment analysis and fear and greed indicator, whatever we call. It's cooled off actually 4.75 down last, and it is fairly close below the 13.78. That's a decent drop that has happened after some spike up that has happened from the 13.4 levels to up to near to 60. There was a big, big 15% plus kind of spike that happened previous weeks, and now good cool off has happened in the last 2 weeks. Right? That the same amount of now it could take support near the 13.4, and then again bounce up, or it could break down further to the next support zones of 11.7 kind of thing. So each call off indicates that the market is not ready to. There is no big indication of a crash or the fear and greed that was existent a few weeks back has come down a little bit, is what we can make out in a nutshell. Regardless of what market is done, market has done nothing, it's sideways, but VIX behavior indicates that there is a fall off. This is good. But look at the open interest data. The latest built up for the monthly expiry of the 25th January, 26th, the holiday. This is a truncated week actually. Let's call it. The monthly expiry is what you're waiting for. The open interest data, the futures open interest is showing Friday. The futures OI had a long unwinding, which is a bearish in nature. People are unwinding the long position that had taken earlier in the Nifty one. The short build up is what, so both are bearish. So short build up on the Bank Nifty, long unwinding on the Nifty. So futures OI is not that great, but we'll see the levels for the options OI for the next monthly, this monthly expiry. That's next week, Jan 25th, Wednesday. Actually, that's what the expiry is. So put call ratio indicates that it is not bullish enough on the Nifty. 0.72 is a little far from the one that we using it as an indicator. 0.90 is very close, closer to the bank. So Bank Nifty seems to be more bullish from the option writer's point of view. From the options wide analysis, you can say. Look at these levels. So if these charts that you're seeing, you see huge resistance built up. It's the greens that is dominating. That is the call writing, put writing, and so the straddles is what that is built up in both the indices. 18,100 has got a highest put and the highest call on the Nifty, and similarly 42,500 has got the highest put as well as the highest call writing. So that means people are betting on that it would be going to be completely flat, and then you will end up in the same places. That's why option writers will be the bigger players has written triangles on both the indices, not just one. Right? That's what we are seeing. Second highest put writing and call writing can be seen at 17,800 and 19,000 on the Nifty, 42,000 and 43,000 on the Bank Nifty. put call ratio is not bullish enough and closer to bullishness in the Banknifty, and long unwinding bearishness and short build up and all that. You've already seen that. So all options sideways is what the market consolidation sideways is what the options YI is not also indicating. Right? No bearishness is evident. Right? It's more closer to the bullishness is what options YI is saying as per the put and call ratings that you see. Moving ahead, how did the industrial sectors perform last week? That's that's interesting. And the only sector that moved up is IT sector. 2% up. The rest all of them hit down 1%, auto 1% down, pharma 0.5% down, FMCG kind of flattish but still down, and reality closed little up 0.25. So the only slight up moves happened in reality and the IT also, or alone, and real moves happen only in the IT. Otherwise, it's all flat sideways. Is what we are seeing. Right? If you see the momentum in the short term and the short term as well as. Let me just pull in the power code. The battery charge is gone. Let me just put it back. Yeah, back. So here we are. Right. So that's it. The bullish momentum in the short-term momentum perspective is seen to be sideways everywhere. Right. And bullishness can be seen in the medium term in the metal sector alone. Right. And you're saying indecisiveness dodges in in the reality sector and taxes. We'll be seeing all of that, right? So in a nutshell, nothing great happened last week except that IT caught up. This is all flat or slightly bearish. Even if the metal is down and auto is down, it's only 1% down, not too much. Let's analyze the charts and find out more. Here you have left side corner that you have the IT. We'll start from there. IT has recovered and it's a good bounce that has happened. And momentum is still in the sideways but rising up. Metal is in the all-time high levels. There is pressure there. There is a divergence which is negative, and it's an ascending breakout scenario, but it has not happened. So all eyes on whether it will be able to do that or is going to break down instead of up as per the price action. Right. So momentum is in the bullish on the medium term, but not in the short term. Short term will just slip sideways. Other sector also showing the selling pressure. It was down moving and then tried to bounce up and then unable to do that, facing resistance below the RSI 60 and then falling momentum is what you see on the medium term. Pharma, yeah, it is trying to take the supply of the channel from our head block out several weeks back, and it's zigzagging in the sideways zones momentum. No clear direction, consolidating. FMCG also consolidating after it had broken out. It's trying to move up, failed from that resistance for the last several weeks. It's down and then consolidating in the same neckline nearby zones. It's also in a rectangular box formation. It's slipped to the sideways and then hanging on there. Reality also sideways, pure consolidation. Last 3 weeks doing nothing but small loading movements. So we are talking about all these momentums on the medium charts. Right? That's how the industry sectors are performing. Now move here. Heavyweights. Index heavyweights that we talked about, the 7 major stocks that is contributing most to the index. HDFC Bank. Yeah, it's a breakout, flag and pound, but it's in a bearish zone where it has failed multiple times. You have to be cautious, but it is attempting to break out from there, and then momentum is clearly bullish with a divergence, bullish in nature, and it has bounced up and somehow to go till 26 as per the momentum divergence setup. Right. So there is a chance it can move up, but remember that it's an all-time high coming in, and it's a box, rectangular box, and breakout from here could happen, but we cannot completely take that as it has failed multiple times at the same zone. So that's what. But flag and pound price action is, and momentum is bullish in nature. The trend also rising up and bullish. We talk about ADS and RSI. HDFC, not the bank. HDFC twin partner is also in the bullish momentum and rising up, and that's also having a flag and pole, and that also has got the same resistance as upside, right? Up there near the 2900 zones, heavy resistance, previous all-time highs, bear zones. Lions has been consolidating down. You can see its momentum is sideways. Price action is zigzagging within that range. after the breakout from the cup and handle, and then as of now it's down falling to the support zones. It could take a support here and then move upside. So you'll have to wait probably for a long time before it decides where to break out or break down. Alright, that's the sideways action that you see. So the SIPC trends are strong bullishness, line sideways, Infosys and TCS, that's what you're seeing here. The sector stocks that had performed last week, some green is seen there. TCS is the words of breaking out of a trend line, and Infosys trying to move back after it slipped down after hitting the resistance of the gap, heading back towards that to see if it could take it out. Let's see. Always sideways as of now, but rising. That's what it's there for both the indexes. It is a bank. It has been beaten left and right. The bank that is major index contributor has got hit last multiple weeks, for 7 weeks or something. It has been beaten down, but it's not living it. With major support zone, it's not ready to give up that. So that is, although the moment has slipped in the sideways, negated the bullish movement, the momentum diverges and all that, and then it's heading downside. So if there is a breach of this support zone where it has been hovering around for long, then it's a rounding matter on neckline also. So it may be not that easy to break that, but if that is broken, it can have a big downside and could break out of this wedge, ascending wedge also. It could break and it could go for the downward. But if it holds on that, then it will be good. But as of now, sideways, what you can see, there is no clear direction at all. Kodak Band has never had directions, so it was zigzagging this range, and that's exactly what it's doing, heading towards support zone downside. Momentum also at support zone. On the weekly, medium term is what we're talking about. Right. Sideways, ICICI Bank, sideways is Kodak Bank, sideways IT stocks, sideways Reliance, bullish HDFC. That's what we can see. Institutions, how did it participate? Look at the FIs. They just sold very little, 2,460 crores last week. And how the market did not fall? Market did not fall because more than that of buying has happened from domestic issue, 3,380 crores of buying. So no heavy selling, no heavy buying, that's sideways. Right? That's a chart of diligence of the selling that you see. It's hardly 2 days of small buying is all that happened from the FI side. If you see the track record in the last 18 days or something, just 2 days of buying, a very small quantity. Otherwise, it was all selling, selling, selling. On the other hand, there's hardly any selling from the day as hardly any, 1 day or something. Otherwise, it was all decent big buyings that you can clearly see on the domestic institution side. So, who's following the market up? It's a domestic institution for sure. Net long from the derivative side on the FI institutional participation, if you see, they also had moved up actually. Yeah. That's what you can see from the charts data. Now, moving ahead. Let's analyze and see how the currency is doing, how the global commodities are doing, how the global markets are doing. So things now, folks. Begin with the currency. Total index, the index that tracking the dollar is showing a downfall. So it's not a big downfall that happened. 0.18% is all that happened, but so flattish movement but bearish movement is what happened. Remember, we had 11.5% of downfall that has happened, and now after a long time, rupee has fallen below the 102, it's 101.49. So there is bearish momentum. It's a good thing that it has fallen after the breakout to the 120 kind of all time multi-decade highs. Now it's cooled off a little bit, right? Which is good, but that doesn't reflect in the rupee strengthening. USDINR currency pair has moved down less than 0.5%, 0.35%. No, remember it's only 2.3 corresponding. It's an M pattern. It's a double top that has happened. It has broken down, and there is every chance that if this support zone 80.47 is breached, then it could mean that it could come back to normal. It could be a big downside that could happen, and then rupee could gain from then on. But rupee has gained a little bit, not much. It is now below the 81 at least. It's 80.96. Still not too far from the 83.5. No, it's very close, but there is a bearish chart pattern that's emerging for the USDINR. It is clearly evident that momentum has slipped in the sideways in the bullish zones at least, and dollar index also is turned to the bearish zones on the short term. Right. So let's hope that the rupee strengthens further in the coming day as per the price action. Now moving on to crude, the biggest commodity that impacts an importer country like ours, the economics of that, right? So it's nearly 2% up. So crude is spiking up. Let's look at These are the cool charts. So it's in a parallel channel after having made a 13-year high of crude at like 20 current levels, and then it has fallen back below the near to the 70 levels, and then again it's backing up, which is not great. But as long as it's below the 90, it should be okay. But there is every chance, as per the divergence of the bullish nature that you see on the weekly charts and the parallel channel, there is a chance that it can breach and move up to the 100 kind of things. As long as it remains this below the 80 or 90 zones, it should be okay for us. Now, right side gold, the hedging instrument, you see that it's having a cup and handle pattern and handle formation that has been happening the last 2 years. It is falling down, made a support at the trend line, and then bounced ferociously, and then now it's at the top of the trend line. And any breakout from here could easily mean that you're making a new all-time high. But think about this: when does gold normally rise up? It shoots up when the market is falling, or there is a fear in the market and people shift their money into the gold from the equity. That's when normally it breaks out. So that gives the folks who choose to be cautious as well. But it's a hedging instrument, right? So people use gold as mostly for the hedging purpose, and that could be the reason why it's rising up. So how gold do? It's one in three phases. It's indecisive gold because it's the top of its channel. It's spiking up for sure, and it's 19% up now. 19%, in a matter of 2 months, it has spiked up, and you keep a close watch of does it give more indications of a spike up, and how does the equity performs related to that. So commodity wise, you see it looks fine. The crude is crude is spiking, but crude is still in the manageable levels, and gold is giving a hedging cushion when the market is not doing anything. And the trouble here is the rupee, which is not strengthening, and also the US markets. Let's analyze what the US markets are talking about. Dow Jones is the chart that you see on the left side, and here you have the Nasdaq, and downside you have the S&P 500. It's a broader market index of the US, right? So let's go and see the Dow Jones, what's happening, right? Dow Jones had several weeks back given a swing low, indicating that there's a reversal towards the bottom of the descending wedge, but it didn't happen. It took the support and bounced back, which gave all the hope to the bulls, assuming that the breakout would happen at 3/4 of the descending wedge, and then it could be a big move from here and all that, but it didn't happen. It faced resistance. So then the candle of the last week is white ridge bearish, which indicates that the price could again get back to the reverses towards the bottom instead of a breakout from here, which is a concern for us. All markets and all the global markets will be backed by the dollar or the US market indices. So, right, Nasdaq, on the contrary, with the Dow Jones and the S&P 500, has shown some green, some attempt to hang out the same place at the top of the same type of descending trend line channel. But it has got a lot of things to take, or a lot of resistance on the upside. But right, it's again sideways that you're seeing there, just like the Dow Jones. And then we find out, you can see it's on the top. Didn't give so much bearish indications as a Dow, but it's also at resistance point at the top of the trend line channel, and you never know what happens. But one thing is short term, not short term, medium term, weekly charts are showing that it's sideways thing that is happening. It's at resistance. There is a possibility of a decline, or it could get hit and then reverse all the way downside after the first attempt, as seen on the Dow, it just failed. So that possibility is still there. So at resistance, global major US market. So even the other US non-US global markets, like the European markets, the French, the German, the London, they're all they're all trying to come out previous week. Just like how the Dow Jones was doing it, breaking out of the trend line resistance zones that they were all in it. Then they have done that, but would there be a follow-up on all of those European markets as well this week is something that we'll have to see. But there is some indications of a recovery or reversal on the upside, or a breakout from the upside was seen in the European market indices, and also the Asian markets are also doing that. Even the Chinese Shanghai, except the Japanese Nikkei, all the other Europe, major global indices were showing some kind of attempt to break out from the resistance zone was seen, just like the US did. But US markets, especially the Dow Jones, the major index, is showing tough resistance to move ahead for this. So you have to keep a close watch. If big moves are happening this side, then we cannot be too much tolerant or decoupled or whatever we call it. We cannot be that decoupled from the when the mother market is falling big. So there was a day in the last week where nothing happened when the Dow Jones fall 600 points. Nothing happened in our market. So there could be some days exceptions like that, but overall, if there is a bearish that prevails, then definitely it will affect our markets, because institutions will pull back the money. Right, so that's summary of the global commodities, global markets, currencies, and all that. Doing now. Only else topic for the next week. 2 short side. One is short side, one is long side. One is constant creeps. It's electrical appliances manufactured majorly. Reason for taking a short side view is because there is a head and shoulder pattern, and it has already confirmed a kind of breakdown from there. And momentum, look at it, it's gone below 40 and it's bear zones. Trend indicator ADX is showing a bearishness is rising up, and it's it's supposed to go down till the next support downside here. So if you trail from there on, you can move and see how far it gets. So normally the size is the size of the head. That much of decline could happen, not always, need not be. It's more effective on the weekly charts when the head and shoulder is confirmed. So confirmations come in, probably you can take a trade below the low of the previous week's candle, and then take a tight stop loss, and then it could be rewarding. That's a short side trade on the counter greaves. And then you have Mahindra and Mahindra. It's already broken out from a rounding pattern, and it's forming a box consolidation. I don't know how long this consolidation could remain, but entry signal has not come in. The entry has made only if it breaks out of this. So there is a long trade only after a substantial move from where it is right now. It is a resistance bearish red candle that has formed in the last, but yeah, it's not confirmed signal yet. But once you get a confirmation with type stop loss on the previous week's low, it could be rewarding. The moment it has done a range shift from the sideways and taking support of the RSI 60, that's clearly seen. That's good. That's bullish range shift, but there is a negative divergence there. Just be cautious about. It normally happens when the market takes a dip and then reverses. So, but you have to be cautious that unless and until, because the price is moving and the normally is falling down, is bearish divergence. So you have to be cautious about that. So with tight stops is mandatory, but this range shift is encouraging on the momentum to indicate the price could take a momentum support and then bounce up from here. And it's a price action box pattern which could break out and could be rewarding. But consolidation buttons are actually happening right now, and there is no clear confirmation that is coming yet. But if it gets a confirmation, that breakout could be equal to the size of this rectangular pattern. Right. So you have to clearly put tight stop loss and get stopped out happily, instead of holding on and then hoping. That never works. So get out and re-enter if you get another signal, because it's consolidating. It could be fake outs like it happened here. So that could happen. So cautious on that. That's a long trade possibility on the swing weekly charts that you're seeing here. Mahindra and Mahindra, long side, Crompton Greaves, short side. Swing trades. Moving ahead, some trade on the index Nifty. This is actually every week. Most of the weeks we put in this. It's a double diagonal calendar spread option strategy on the Nifty index. Actually, near month put and call options we sell, and for far month put and call options we buy. Okay. So we get the advantage if the week spikes up and the price stays stable on the hedging side, and that compensate for the delta moves. So completely hedged, you know what you will lose and what you get. Plus one may not see very attractive, but you get out at 2% less, 1 to 2% is all that you should target. But every week there is high probability that you can get that every week. The range is decent enough, not that great this time, but 17,800 would be good support on the downside, and 18,300 would be tough to crack. So that's a good range that we are giving. So hold on till the high peak, the selling zone is breached. If that is breached, you can roll up or roll down. higher up the side, and then adjust it if you want. Otherwise, you can get out that loss zone. But as long as it remains within the zone of 17,800 and 18,300, you will make a decent enough money. Right? But don't extend double diagonal spread last day of the expiry. Get out on Wednesday, whatever you get. But keep getting that every weekend. That's consistency is the beauty of this strategy. Right? So that's the double diagonal counter spread on the Nifty index. Another, there's a payoff chart that you see here, and that's trading opportunity. Okay, that's a wrap up after having studied all the different parameters. Come out some beautiful trade opportunities possible for next week. Let's conclude what happened last week. It was consolidation for the fourth week. That happened, and it's indecisive close, very much away from the candlestick pattern, and we're still at a crucial support zone from where the breakouts that earlier happened, and trend momentum about sideways. The trend is not giving any indications. So one side it is just crossed over bullish, one index is crossed over bearish. So clear indications, pure sideways, exact movements is what is happening. Bollinger Bands is showing pure consolidation, contraction of the bands, and bearish bands because 20 moving average is still there as a hurdle, and cannot hold about that more than this. Operator is also what is not bullish enough, but other one is not not bearish enough kind of thing. So USDINR, we have seen that it's in the top of wedge, and then anything could happen from there. Fyers are not buying definitely. One or 2 days they don't sell, or 1 or 2 days they buy peanuts. But majorly they have been selling consistently for almost the entire month. So that's why I have a view. Still, I have a mild bearish as per the charts. But one thing you have to remember, we are at a major support zone. We are consolidated for a long time. And market is not ready to breach that just like that. It has taken a new swing low, but still that support zone seems to be very crucial from where the breakout happened. So there is a possibility of a change in priority. There is a momentum divergence, bullish in nature on the daily charts. The volatility divergence, so the bands that we discussed last week, that's also bullish in nature. If it works out, a doubly pattern breakout on the upside is possibility. They're all in favor of the bulls. Crude is also okay, although it's spiking as a worry, but as long as it's not spiking too much, it should be okay. Rupee has gained since the dollar has come down. US markets are in a crucial zone. They're not ready to fall down. It had fallen down and then bounced up immediately. So it's not able to break out. That's a sideways. More of a consolidation or sideways continuation for some period is what we may have to anticipate. Having the market at a major support zone is also could be indicating that it's not it's going to hold that, right? But US markets, we'll keep a close watch as well. Global markets also, we have seen that there is a possibility of comeback or a breakout, or a recovery, or reversal towards the upside and all that. The possibility is still there, but there are inflation worries, interest, rate hike worries, COVID worries, war worries, and all these things are still there. So uncertainty prevails. That's why the VIX is holding on to the 14, then spiking 16, 14, 16. So that's what is happening for the week. So, right. So rupee, still we cannot say it's not great. So still 81 close by. Crude spiking. VIX not ready to pull out below the 14 for sure. Although this week it happened. So it's like you have to be cautious. Spike ups could happen, but don't mistake that as a rally unless the price action says so. We don't report the price action says 17,500. Price actions levels we've seen when analyze the support resistance levels, but in a brief and medium term, 17,500 could be a good lower side on Nifty and 40,500 on the Banknifty. 80,500 upside. The movement above that and 43,500 upside of Banknifty. That would only mean that we are here for another rally. So until then, just have to assume that it's a spike which may or may not sustain. That should be the view that we have. So interactional is all that we can make out in the market sideways. Right? So that's it. Productive capsules. That's all we can do every week. I say that. How do you do that? Have stop losses. Have hedging when you're overnight positions. That's 2 ways. How do you protect your investments? You should have hedge. Either use gold as a hedge instrument or use option strategies to get rental income when the market is not doing that great and you don't want to sell off your quality long-term investments. and so two things. So there are a lot of videos available on the option strategies playlist. You go and look at the videos. You can learn a lot from that. Apart from the daily analysis, we have strategy videos as well. Make sure to see them. That's all I have. Mild bearishness continues for the next week as well, and I hope this market study has helped you to get some more clarity on what the market is doing, and it would have helped you in some way to making a better trade plan for the next week. So if it helped you in some way, please don't continue watching this without subscribing. If you're not subscribed, please do that. Leave in the comments feedback, and more importantly, share to your friends and colleagues, because we have very few solutions, and YouTube algorithm is not taking us to a larger view. So only if you share with your friends would the channel subscriptions increase, and that's only way to motivate ourselves, right? So thanks for watching. Happy trading, happy learning, happy investing. Bye bye.